Have you ever wondered how to save money while purchasing a new car? Well, today we're going to discuss one of these techniques. It's called novated lease. But before I get into the details, I should let you know that this video is for information only. I am not a financial expert, and if you need financial assistance, you should talk to a professional instead. So, what is novated lease? Novated lease is a financial arrangement that commonly utilizes salary packaging. It simply means that your employer is going to cover the expenses of your car financing as well as its operational costs from your salary package using a blend of pre and post tax deductions. Now, the good news is this arrangement allows you to drive the car you want, any make or model, but it can also help boost your savings by you not having to pay for the GST amount as you make your purchase. Now, this GST amount can be quite substantial. It can be anywhere between $5,000 to $10,000 and even more, depending on how much you want to spend. But to get the maximum benefits out of these GST savings, you should keep your budget up to a certain limit. As of making this video, as of this financial year, this amount should be under the ceiling for GST exemptions, which is just under $6,200. You can also save money on the purchase price of this vehicle, as some of these companies that offer novated lease get fleet discount from the car manufacturers, bringing down the price even further, making it more competitive than the existing market price of the same vehicle. On top, this arrangement can help you to save on the running cost of the vehicle, new or existing regardless, even the car that you are currently driving. Another key advantage of novated lease is that a fixed amount will be deducted from your salary at each pay cycle, and that's why you can plan ahead. But it can also affect your eligibility because this amount is calculated beforehand. If, for instance, you are a casual employee, which means that your take-home salary will vary between pay cycles, and that's why you may not be eligible for novated lease. Now, despite the benefits, there are some potential loopholes that you should be aware of. So in this video, we are going to explore those areas. We're going to do the calculations, and more importantly, I will provide you with some tools which you can use to make rather an informed decision should you decide to purchase your vehicle via novated lease. So without further ado, let's dive in. Now, before we start punching our numbers, I should let you know that all the calculations that we are going to do today are for 365 days or 1 year period. But to do the pre and post tax deductions accurately, I have to introduce you to another notion which is called Fringe Benefit Tax for that particular year. Now, this FBT year is slightly different than the regular financial year. It normally starts on 1st of April and finishes on 31st of March. So all the calculations that we are going to do today, all the components of this novated lease, whether it's lease payment, whether it's on-road cost or running cost, again, we're going to break it down in detail in a minute. So all these components of novated lease will then be multiplied by a fraction. Number of days left of this FBT year divide 365. So let's say, for instance, you purchased the vehicle on 1st of June. So how many days left of this FBT year? 305. So all the components, lease payment, running cost, on-road cost, will then be multiplied by 305 divide 365 to get the accurate pre and post tax deduction for that particular FBT year. Now, for those of you who don't know what fringe benefit tax is, it basically anything that you receive on top of the salary is considered to be fringe benefit. Now, of course, there are some finer distinctions as to what qualifies precisely to be called as fringe benefit, which we are not going to discuss today. But this novated lease is definitely a fringe benefit, and as such, your employer is subjected to very hefty tax rate of 47% for offering you this benefit. But the good news is this can essentially be brought down to zero. These 47% hefty tax rate can be offset, can be brought down to zero by making your own contribution. Okay, this is why pre and post tax deductions are part of these calculations, which we are going to discuss today. Now, for all intention and purposes, what we have to understand is that there is this notion called FBT value. We're going to look into this value in a minute. All you have to remember is this FBT value will be multiplied by 20%. Okay, this is what you only have to remember to do these calculations properly. If you want to understand how much you can spend, you should visit ATO website and look for information which is called luxury car threshold. This value is updated every single year, but this is the amount that you can budget to get the maximum GST savings should you decide to buy your vehicle via novated lease. So now that we covered some of the basics, let's get into the calculations. And in this example, we are going to assume that the vehicle that you're going to purchase is worth $45,000. There is a delivery charge of $1,500, and you also have to pay for the stamp duty based on the purchase price, which is about $1,350, and you're making $90,000 a year, and the lease that you are taking out is for a 3-year period. Again, these numbers are completely arbitrary. You can adjust the numbers the way you like. Okay, so if you add these three values, the purchase price, delivery charge, and stamp duty, the total would be $47,850. And this is the amount you'd be borrowing if you take novated lease. As you can see, you are not paying GST at this stage. However, if you purchase without novated lease, you are up for about $52,500 outright. Now, if you take out the stamp duty from this total above and add GST, you get the FBT base value of the car, which will be used to calculate the pre and post tax deductions. As I mentioned earlier, all you have to remember is that this FBT base value is to be multiplied by 20% to get the accurate proportions of pre and post tax deductions, making the fringe benefit tax for your employer to be brought to zero, as well as you'd be paying only your regular income tax. Now, there is another term that we should discuss at this point. It is called the balloon payment residual value. For you to own this vehicle at the end of the lease, you'd be subjected to this balloon payment residual value. Now, ATO has strict guidelines as to what percentage of the borrowed amount would be considered as balloon payment, okay, at the end of the lease. So in this case of a 3-year term, this percentage is 46.88, and the amount that is calculated based on this percentage would then be subjected to GST. So in this case, the GST inclusive amount that you'd be paying is $24,675. So as you can see, although you won't pay any GST for the vehicle as you make your purchase, however, at the end of the lease, as you own the vehicle, you'd be subjected to GST payment based on the leftover amount. Another point I should mention is that should you decide to sell this vehicle to a private buyer at a higher price than this residual amount, any money that you make out of this sale is for you to keep. That money is totally tax-free. In other words, you don't have to pay any tax or GST based on the profit amount that you will make out of that sale. That is 100% for you to keep, and that money is totally tax-free. One of the most confusing part in this novated lease calculation is to accurately figure out the loan payment. Initially, a significant proportion of your repayments goes towards the interest. Over time, however, more and more payment chips away from the principal and thus reducing the overall interest. Now, understanding how the compounding effect really works can be quite confusing. Another key to remember is that these lease payments are 2 months in arrears. In other words, the first two payments are set to zero. Why is that? Because this structure allows the salary packaging company to establish the correct payroll deductions, along with some other deductions prior to the first real payment is due. Again, all of these things can be very confusing and quite prone to human errors. And luckily, that's why we have online calculators, which can do the exact same thing, saving us tons of time and effort and eventually eliminating all the confusion. Okay, so right now I'm going to show you a couple of these tools where if you punch the numbers along with the balloon payment, it is going to show you exactly how much your repayments would be at each pay cycle. One of my personal favorite website is called Rate City, where it shows even the breakdown of how much the interest and principal you'd be paying at each pay cycle. Now the catch is the longer the lease term, the higher the amount of interest you'd be paying. And that's why you can also see by varying the length how much interest you would save should you consider a shorter lease period. Now personally, if you can afford, I would say go for a lease period of 1 year. Why? Because this is the period where you get the most benefit. You save on the GST as you make your purchase. You can also get a fleet discount, bringing down the purchase price of your new car by at least several $1,000s. Now, there are of course some sneaky ways that you can save a lot of money by not paying the interest. Let's say, for instance, by taking out a credit card loan. You take out a credit card loan, you pay this debt, the money that you are borrowing from the novated lease company, you pay out this debt, you take out a credit card loan and pay absolutely no interest for another 12 to 24 months based on their terms. So if you don't mind paying interest for 1 year, it can be a good option. Next on our list is fuel calculations. Now, one key element to understand when you're dealing with novated lease is that we are dealing with averages. Okay, you are making a consistent payment, a predetermined amount, a fixed amount, deducted regularly from your paycheck at each pay cycle. Okay, and that's why when these values are presented to you, they are averaged out. If, for instance, you are paying for fuel out of your own pocket without taking out a lease, the amount you would be spending might differ. But when you are taking out the lease, fully maintained novated lease, the amount is predetermined, is already set out for you, and that's why in most cases the amount that you will be charged is more than the real life amount. Okay, let me illustrate it for you. Each car manufacturer, for instance Toyota, will publish an average fuel usage for each of their vehicles. This fuel usage is normally represented in liters per 100 kilometers. For example, an average small car would consume about 7 to 8 liters per 100 kilometers, and for a large 4x4 SUV, this can range between 12 to 16 liters of fuel per 100 kilometers. So in our novated lease calculations, we can use this measurement to calculate fuel budget for each of these scenarios. Liters per 100 kilometers multiplied by the average kilometer traveled during a year, divide 100 times average cost per liter of fuel. This amount is going to give us the budget for fuel for a particular year. Let's assume that our vehicle consumes 7.5 liters of fuel per 100 kilometers and we are doing an average of 15,000 kilometers a year. So you multiply both of these and divide by 100. And then assuming that average fuel cost is $2.25, we have the annual fuel budget of $2,531. As you can see in these novated lease calculations, we have utilized a fuel price of $2.25 per liter. Because in some parts of Australia, fuel price is consistently at this level. Now, this underscores the importance of considering a lease, as it inherently operates on an average basis. Now, if, in contrast, let's say that you live near the CBD, where there are lots of petrol stations. On a favorable day, you might fill up the tank by purchasing fuel at a rate 50 cents lower than this estimate. And as such, if you purchase fuel at $1.75 instead of $2.25, your annual budget would decrease to $1,968, yielding a savings of approximately $562 per year. So going back to my previous argument that a fully maintained 1-year lease can be a good option because you would have to pay some money for the interest and a little bit extra for the fuel. However, you can still enjoy other benefits such as GST-free purchase as well as fleet discount. Besides, you always have the choice to do a balance transfer via getting a new credit card on the residual value while paying no interest for another 12 to 24 months on that residual value based on the terms of the credit card company. Now, next on our list is the tires. Now, this is a very easy one. All you have to do is to figure out how many thousands of kilometers your tires can sustain before they need to be replaced. Now, on an average, it could be about 35,000 kilometers. So if you are on a 3-year lease, which means you'd be driving about 45,000 kilometers, 15,000 a year, you would need about 45,000 divide 35,000, average duration for tire replacement, which is about 1.29. So within this 3-year period, you would need 1.29 sets of tires. Now let's assume that a set of tires cost you about $850. Which means within this 3-year period, you have to spend just over $1,000 for tires. Now, if you average it out, if you divide it by 3, you get a rough estimate of how much you have to spend for tires every year, which is about $365. Our next on the list is maintenance. This is also pretty easy. You have to do maintenance once every year. Now, let's assume that every time you do the servicing, you have to spend about $450. So your annual budget for the maintenance is what? $450. Now with that, we have covered all the running cost of your vehicle. We have covered for the fuel, we have covered for the tires, and of course we have covered for the servicing or maintenance. And previously we discussed about loan payment, the interest, principal, and those things. So we are getting towards our pre and post-tax calculations. But we are still short of one other thing, which is on-road cost, which we are going to discuss now. Now previously, we talked about stamp duty, which was part of the finance. So what are the on-road costs? On-road costs are CTP and Rego. Okay, you also need a comprehensive insurance. And of course, there are some account management. You have to maintain an account with the Novated Lease company, and there are some account management fees. And finally, there are licensing fees. Now, the insurance, the comprehensive insurance, does not necessarily have to be part of this arrangement. You can shop around and find a better deal. But the requirement is you need to have a comprehensive insurance when you are taking out a novated lease. Okay. Now with that, we have covered all the areas of novated lease, which is we have covered the loan payment, we have covered the on-road cost, as well as we have covered the running cost. So now we are ready for the final stage of our calculations, which is the pre and post-tax deductions. So now let me quickly show you how you can calculate these pre and post-tax figures accurately as we did in this case. First, head over to one of those links which will give you the exact amount of interest you would pay based on the lease terms as well as interest rate. So in this case, we are considering an 8% interest rate for a 3-year lease term with an ATO defined residual value of 46.88%, which gives us the monthly payment of about $946 for the amount that we are borrowing, which is $47,850. And yearly, that figure stands at $11,352. We also have $100 for the CTP and Rego, just a standard amount, $166 for comprehensive insurance. Again, you can shop around to find a better deal. $20 for account management, $4 for driver's license. This gives us $290 for our on-road costs. And then we have $210 for fuel, $30 for tires, $35 for maintenance, giving us a total of $276 for the running cost of the vehicle each month. So if you sum up all these numbers, that is the loan payment, on-road cost as well as running cost, and multiply this figure by 12, then we have the total annual running cost of $18,155.88. So finally, it is time to do the pre and post-tax calculations. Now, we have the FBT base value of $51,150 to be multiplied by 20%, which gives us the figure of $10,230. And this is the amount ATO allows the employee to pay towards the running cost of the vehicle after tax to bring down FBT, Fringe Benefit Tax liability of the employer, to be reduced to zero. So if you take this amount out of the total running cost of the vehicle, that is $18,155, then we have $7,925 as before tax contribution, that is pre-tax deduction for the running cost of the vehicle. So in summary, we have pre-tax deduction of $7,925 and post-tax deduction is $10,230. Since we are paying a significant amount of the running cost using our pre-tax earnings, our annual net salary stands at $63,292 as opposed to $50,327. And this is the case when all the expenses regarding the running cost of the vehicle is coming out of your pocket after tax. And all these figures are calculated using standard tax calculation tools that are available for you to use online. So please check all the links in the description and adjust the amount as required. As you can see, novated lease can help us save money while making a purchase for a new vehicle. I hope you enjoyed this video, and if that is the case, please like it, share it, and if this kind of material suits you, then consider subscribing. Thank you for watching, and I will catch up with you on the next one. Bye for now.